Micron reported earnings after the bell. Let's get to it. Micron came out with earnings right after the bell. We closed at $50. They closed you as close to the strike as you could for tomorrow. You're down only about 49, 41 right now. You're not absolutely getting slaughtered, which is surprising as we go through these numbers. You had this immediate knee-jerk reaction you can see down here to that 47 line. We're going to have to see how this trades around. They might just try to pin it because of the option expiration tomorrow. But more importantly, let's go through the numbers. You want to make sure you subscribe to the channel, click all notifications, because this is very timely information. It doesn't hold the same value if you catch it a week or two later. Micron, as the data is coming out, we're just going to run through it. So this quarter, which is fourth quarter of 2022, they beat by $1.45. $1.30 was the estimate. $6.64 miss versus $6.68. So they got here by cutting costs, most likely, and we're going to learn more about that on the conference call. First quarter adjusted revenue, 4.25 plus or minus 250 versus estimate of 5.62. So let's back that 250 into that, get 450, divide the two numbers, and you're off by a little over 20% decline in revenues for the first quarter. That's anything but stellar. Look at the earnings and what's going to happen here. They're saying 4 cents plus or minus 10 cents. Let's take the best case number and make it 14 cents. 14 cents here versus the estimate. It's not good. And now they tell you which way this is leaning. Micron Technology says decisive steps to reduce our supply growth, including a nearly 50% wafer fab equipment CapEx cut. Okay, who do CapEx cuts affect? Okay, you're going to affect the foundries and you're going to affect the semiconductor equipment manufacturers, AMAT, Lam Research, those kinds of companies. This is not what you want to see. It says, due to the sharp decline in near demand, expect supply growth to be above demand for the rest of the year. Macro is uncertain. We expect demand growth to be closer to long term soon. So this is really not what you want to see. And this CapEx is going to be around $8 billion. And they tell you where that fits in right here. So you can see how the stock was acting right before we came out with that earnings news. We're actually starting to trade up going into that 4 o'clock number. You're starting to see people wanting to be involved. So Micron's definitely going to be on our list to watch tomorrow, but you're going to have to watch SOXL as well. We're going to have to see how this plays out. You took out a new low today and bounced. I really believe that the bounces that we saw today were just predicated upon the fact that you have PCE tomorrow, and we're going to go through those numbers very shortly. Stay to the end because there is a tremendous amount to go over in a very short period of time. But I would watch this SOXL tomorrow. Is this the cut we're looking for? Is this the cut and the bounce? I don't think it is, and I'm going to just show you a couple things in a second here. But if you just take a look at what happened, and when I talk about why you want to subscribe to the channel and why you want to watch these in a timely fashion, go back to Tuesday's video where we said that this was our target that Apple could get to, and look at where we hit today. So this all connects. It all leads up. So if you watch one, you should keep watching them. That's the best way I can explain it, to follow along. Anyway, so you can see what happened here. We ran up on very bad news, right? They came out and said cut production. What they do, they pulled the old flim-flam and just knocked everybody straight down. Now, if you take a look at this, all you need to be doing is looking at where your 50 is. Then you put in your 21, right? And you've broken your 21. If you never went near this again since it broke the 21, and then you just simply watched the 10-day, right? Very simple, very, very simple way to get in and out of that stock, right? Don't overcomplicate it sometimes when you see patterns that are working. Very simply, at this point, you need to hold in here. Now, my hope with this volume is that you're going to get enough volume that maybe we get a flush out. But with what we're seeing going on overseas, in the UK with what they're doing, and then there were some currency issues again in China. You can watch yesterday's video where we go over currencies and how it's all tied together. I don't know how this plays out yet. I don't know where we are. Now, we could bounce tomorrow going into the end of the quarter. Fourth quarter is always pretty decent, but you're going to have to keep your eye on names like Apple tomorrow. If you look at some of these behemoths and you just see what they're doing, they're not doing anything that's fantastic. Let's zoom in on this. I mean, it's really hard to get excited about Meta at 136 and it can't hold that level. So we're seeing a lot of cracks here, and I would pay attention to those cracks, right? That's not what you want to see. Now, NVIDIA, same thing. We undercut today, but are we going to continue to undercut? We just simply don't know. But what we do know is that we are constantly rejecting 50-day SMAs on large cap stocks. Why is that important? Who buys at the 50-day? Who sells at the 50-day? Institutions. So people were comfortable here buying. They're not so comfortable anymore. Now you have this H, you have this close. Go take a look at the top 10 video from Saturday. Make sure you watch this Saturday's top 10 video because it's going to go through everything from soup to nuts, end of the quarter, currencies, everything. It's going to be much more in depth than usual. There's a lot to cover. So you can see your H right here, right? You break this 266 and you're going to go from there. If you followed along in the other videos, you would know that we are short this and I am continuing to be short it. Caveat, I did close a little bit of it today just from a risk management perspective going into PCE, and we should probably go through those numbers before the index. So here are the numbers that came out today. German CPI, everybody's watching this because it was very high last time, and obviously Germany's a huge economy. And you're seeing the actual is 10% versus 9.4. That was the first crack of S&P futures this morning as soon as this happened. Then you can see month over month in Germany is actually 1.9 versus 1.3. That's not what you want to see, okay? Let's go through this. This is all one big trade right now. The whole market is one big trade. So us talking about this company's earnings and that company's earnings, that's all fine and dandy, but that's minutia compared to what we're really dealing with here, right? This is what you're dealing with, the meat. So if you take a look at some of these other numbers, like our core PCE prices are up. So people are a little concerned about that PCE number tomorrow that is supposed to be smoother and more favorable than CPI. Now, maybe that's not the case tomorrow. So we don't know. That is 8:30 tomorrow morning and can be just as volatile as today, if not more, just like CPI was last time. And then you go through GDP, and we thought that this would be something, but it's a non-event. The larger event was that corporate profits were supposed to come in at 9.1%, came in at 6.2%. So now they're down by a third, which will greatly should affect the people that are being hired. But it gets better. When you start drilling into it, you find out that initial jobless claims actually broke 200,000, which is a major level. So it's important to understand that. And now you're going into tomorrow at 8:30, window dressing tomorrow, end of the quarter, right? What are we going to do about this? Well, we're going to map out a little game plan here for everybody. You undercut today, right? So does that undercut hold or does it not hold? Frankly, nobody knows. But the important thing that you need to understand is that the market is moving on economic data. It's moving on macro data, and it's moving on government intervention. Those three things. So we can look at this chart as much as we want, but unless we know that Jackson Hole speech, unless you know what that CPI is going to be, unless you know how we're going to respond to the Fed when they raise rates and give a speech, it's all pointless, right? So you can trade all you want, and I am a technical trader. This is how I trade. But if you don't understand where your time bombs are in this market, you're going to have a problem. So I would strongly suggest that you start understanding the correlation with what's going on out there. I saw a lot of this yesterday on social media, and I get it. I mean, these are very specific technical patterns when you bounce off of here, and the RSI was where it is, but it's nuanced. You need to understand that you bounced because of government intervention. Then you need to drill into that government intervention and understand it. If you don't, you're far behind the other traders, and that's exactly what happened today. People stepped up, that news came out, and that was it. And then it was on, and then it was selling. Now we took out new lows. So the question is, how are you going to handle this tomorrow? You're going to have to see how that number comes out, and then you're going to have to see how we react to that number at 8:30. Same thing here with QQQ. You can see you're sitting right on that level, right? If you break this, you're probably heading lower. I mean, the majority of my positions at this particular stage, even going into this, even covering some of them, are to just very simply stay short and stay out of the way. If you're uncomfortable shorting or bear ETFs, I've been preaching it in our trading community for about 2 weeks now. I think they're sick of me. I think they're sick of me saying it. This became increasingly clear that this was going to accelerate after the Fed meeting, and you can just see this huge bear flag, and they are everywhere. So, what are other things that you need to watch tomorrow, and what are signs that this can get worse? This is the VIX, and this is how we imploded yesterday, and everybody got giddy because the VIX imploded. That's great. Today, the market took out a new low, and the VIX didn't even make it back to the level it was previously when we thought it might take out a new low. So if you think about that, they felt no need to hedge the same way 24 hours later. That's not signs of capitulation. That is signs of just not caring, right? That's not what you want to see. And I'm not saying you're going to get this again. We may never get this again in our lifetime. But you should see a four handle or some sense of panic, and we're just not seeing that. Make sure you watch this Saturday's video. It's going to be longer and broken up. I'll make sure I have chapters in it, but it's going to be really pivotal for people to understand, and it's something you're going to be able to use over 30 days. Also, trading community is open, I think, for another 3 or 4 days. The trading community link is right up here in the top right. Just simply click it to take a look. First 20 new members get a free coaching call with me, and onboarding call for 30 minutes. Everybody, be safe out there tomorrow. And just honor your stops. Don't be a hero. There's plenty of time to make money in this market. Let's just get through tomorrow and set up and go into fourth quarter. Trade to win.